Very good morning, dear students. So once again, welcome to our 11th standard commerce stream under the accountancy subject. So previous class we discussed the introduction to accounting, correct accounting concept, what is the objectives of accounting, advantages and limitations, then types of accounting information, and uses of accounting information and their needs, and finally qualitative characteristics of accounting information. Okay, so this class very important one, going to discuss the different basic terms used in accounting terminology. Okay, so what are the basic accounting terms, like our medical field, or what are the medical terms available? Same in accountancy, a lot of accounting terminology is available. We will see one by one. Correct, what is the meaning of expenses, income, what is the entity, what is the meaning of liabilities, what is the asset, like that. This class, this video, going to discuss everyone. Okay, now we'll move for the first one, very important one, entity. That is the first one. So what is the meaning of accounting entities? Okay, so here the accounting entity is a discrete unit of substance. So what does this mean? It's nothing but is considered separate and distinct from its owners. For example, any person doing the business, so business is different, a owner is different, correct? That's why it is called entity, business entity. Maybe it could be a business, a division, department, cost center, group of business, government or non-profit entity. Okay, could be a sole owner, like only one person doing business, like partnership or company. What is the meaning of partnership and company? Later on you know everything. Okay, now here exactly what is the why accounting entity is important. That is very important. Okay, all the information contained in the financial statements so only reflect entity's transaction only. So not both owner and entity transactions, only related to business transaction. Okay, that is very important. That's what see here. Show one example here, accounting entity principle. So later I'm going to see the accounting entity principle. The principle states that business is separate and entity from the top its owner. Okay, that's what the factory. So whatever the owner paid salary to the employee, so that is the expenses spent by the company, not for him personally. Correct. That's what here entity. It's a very important one. I once again repeat it. The business and its owners are two separate existence entity. Any private and personal incomes and expenses of the owners should not be treated as the incomes and expenses of the business. Correct. That's why the business is different, the owner individual is different. Okay. That's what very important one. First one is entity. Now second one is very important, business transaction. Correct. See, any activities related to business, you will say that is called business transaction. So business transaction means exchange of value for value, maybe in goods or service against money. Suppose we are dealing any goods, we are selling any goods, so we got money. That is called business transaction. How it will measure in terms of money. Correct. So definitely should be relevant to the business. That's why when you are doing the business, definitely related to the business. That's why it is called relevant to the business. Then between one or more persons or firms, maybe sole proprietor or partnership. Okay. So maybe for even to be a business transaction must possess the quality of economic substance. That is very important. Then again related to the business. So affect the economic result any business. Okay, during the transaction we will know why you are doing business, mostly for the profit. Correct. So later on we will know what is the profit meaning. Correct. So must be capable of being measured in monetary terms. That is very important. So usually business transaction may be deal with maybe cash transaction or credit transaction. That is very important. Okay. So that's what here. Cash transaction which includes exchange of cash, and credit transaction in which the payment of cash is promised to some future date. You can't pay immediately. So later on you are going to pay. That's what it is called credit transaction. Okay. That's what second important term, business transaction. Now we are moving for assets. It's very important for the business. Correct. Assets nothing but what? Property of the business. Correct. So usually assets means property like building, land. Here the exact meaning what? The general meaning assets means all available property of company. So assets are probable future economic benefits obtained. So you are purchasing assets for the future benefit. Correct. Long term benefit. So controlled by a particular equity as a result of past transaction or events. Okay. According to our Institute of Chartered Accountants of India, so what is the meaning of assets here? The tangible objects or intangible rights owned by an enterprise and carrying probable future benefits. Okay, that's what here very important. Resource of some value acquired at a specific monetary cost, some money, by an enterprise for carrying on its business operation. So assets controlled by a particular enterprise. Okay. So like maybe what is assets here? Assets may be classified into maybe fixed assets or current assets or fictitious assets. Okay. What is the fixed assets? Nothing but you know very well: land, building, machinery, furniture, goodwill, patents. Here what is the meaning of goodwill? That is coming under intangible assets. Okay, the current assets, day-to-day stock of goods, cash balance, bank balance, tools. These are coming under current assets. Within the year, you can easily convert it into cash. Then fictitious assets. Definitely certain expenses, the benefit of which is available for more than 1 year. For any example, any advertisement expenses, we can't expect result for the same year. Maybe it may be more than 2 or 3 years, correct? That it is called fictitious assets. Okay, so here the exact, what is the meaning of tangible assets, we can clearly see in here, correct? Tangible assets mean you can able to touch, can touch and feel. That's what again the example given: machinery, buildings, vehicles, stocks, land, cash, even a computer, our air conditioner, our washing machine, like that. What is intangible assets? You cannot touch and feel, correct? Trademarks, franchises, copyrights, correct? Know-how, goodwill, reputation of the company, patents, the company's secrets, know-how, techniques, that's all coming under intangible assets. Okay, can't touch and feel. That's a very, very important. Assets also may be classified into tangible assets and intangible assets. This you can discuss later on very detailedly, correct? The fourth one is, what is the assets opposite? Liabilities, correct? So what is liabilities? Very simple. So how the assets like property as a liabilities, definitely we have responsibilities, we have owed obligation to another party. We are owing money to the third parties, like any creditors, like that. For example, you have any loan, like personal liabilities. What is the meaning of personal liabilities here? The example clearly you can mention here, correct? So any car loan, you have to pay money. So naturally you are liable to the car showroom or where you purchase the car, you have to pay, correct? Then credit card, very, very naturally nowadays, credit card is very, very important, correct? So naturally credit card means on, you are liable later on, okay? Like any loans, like example, as a student, when you get loan, you have to repay. That is the example of personal liability. Coming for the business liability, that's what. When you are going for any purchase of products, you can't pay immediately. You can pay later on, correct? That's what you are liable to the person, liabilities, correct? That's what. We used to grow business. That's why you are moving for liabilities, correct? Similarly, liabilities maybe there are two classifications. So one is non-current liability, other is current liability. Non-current liability is naturally for the longer term. Liable for longer term. You can pay more than 5 years, 6 years, like that. That's why it is called non-current liability, like bank loan, any mortgages. Similarly, what is current liabilities? Within a year you can be able to pay. That's what it is called current liabilities. Okay. Future you will learn everything. What is detail for the non-current and current liabilities. Here now you understood for the liabilities, correct? Now the capital, the very important one. As a business, everyone knows that we invest some money. That money is called their capital, correct? The capital means anything brought by the owner into the business in cash or in kind. It may be property like building, land, then any machinery like that. See the map here, correct? See here. The equation very important. Once you know the capital, as you know assets and liabilities, this is very, very important equation. See, assets is equal to what? Nothing but capital plus liabilities together. Or asset is equal to capital minus liabilities. Or assets plus capital is equal to liabilities. This is very, very important equation. So later on, one of the topic you can discuss detailedly. Correct? Now you understood the capital. One of the business, capital is very, very, very important for the business. Correct? Now we're moving for the drawings. So once the drawings, naturally you know, any personal use you draw the money, that is called drawings, correct? It is a owner's equity account used to record the withdrawal of cash or other assets made by an owner from the enterprise for his personal use during the fiscal year. Okay, so naturally that's what here, see, what is the drawings, the meaning? In accounting, drawing means anything withdrawal by the owner from the business in cash or in kind. Okay, that's why it is called drawings. For personal use. Then seventh one, goods. As you know goods very well, so any business, so what type of goods are going to deal, that is very important. So as the goods are the what? So articles in which the business deals, correct? It is a term that applies to all the items held for sale. For example, when a person dealing computer dealer, so for him computer is a goods, not a asset, correct? Suppose a person dealing for vehicle, like a car sales, the car is a goods, not a asset for the the company, correct? That's what here we should be very careful. The goods is the meaning. The business, so what products you are going to deal, that is called goods here, correct? Okay, after the goods, see, the goods may be goods and services. Okay, so goods means an object as a people want that they can touch or hold. A service is action. For example, doctor, lawyer, chartered accountant, they are coming under services. Okay, that's what here, the difference is slight difference here. So you understood what's the meaning of goods and services. Okay. So the definitions available exactly in Sale of Goods Act, later on study when you are higher classes. What is the definition of goods? Since the goods means every kind of movable property other than actionable claims, and money and includes stocks and shares, growing crops, grass and things attached to the farming part of the land which are agreed to be severed before sale or under the contract of sale. Similarly, service also. Service is nothing but what? Any description which is made available to potential users and includes the provision of facilities in connection with banking, financing, insurance, transport, processing, supply of electrical or other energy, so like that. These are coming under service activity, correct? That's what here the goods and services. Okay, now moving forward, what is the meaning of sales? What is sales? One of the important terms. So as you know, what is the meaning of sales here? Definitely sales nothing but what? Sales are total revenues from goods and services sold or provided to customers, correct? That's why it is called sales. A collective revenue is called. How you will? What is the meaning of sales here? Any, for example, any goods you sold, you get money. Okay, so here we will say sales. After sales only you got revenue. That's what here. Sales may be called cash sales or credit sales. What is cash sales? You get money immediately. What is credit sales? You can't get now. You will get later. Correct? That's what credit sales. Now, one sales, as you know, sales returns. So opposite. Naturally, goods sold when returned by the purchaser are termed as sales returns or return inwards. So should be very careful here. The sales return, one more meaning, returns inward. Okay. So naturally, suppose any good sold to the customer, some problem, they can be returned back. That is called sales return. Now moving for purchases, correct? Here what is purchases means? Naturally, purchase of goods and services and not fixed asset, correct? Here only the purchase of goods. Nothing but here also, how you will purchase? Maybe cash purchases. You paid immediately for that particular type of purchase. Then credit purchases. Maybe not now, later on you are going to pay, correct? That's why it is called credit purchases. Then moving for purchase return, correct? So how they are a sales return? Similarly, purchase return. Suppose as you are a person bought anything, so due to any default, say goods returned are known as purchase return or return outward. That is very important. We also call return outward. So goods purchased may be returned when they are not as per specification. Suppose some specification you never satisfied, so they will send some other product, correct? So naturally you want to return, or some defective items due to any other reason. So these are the situations you can able to return your product, correct? That's it is called purchase return. Okay. Then the next one is very, very important. Stock or inventory. What is the meaning of stock or inventory? Okay. It may be raw material, or it may be work in progress, or it may be finished goods. So here the three way you can say inventory may be raw material. What is in our hand? What is our raw material? So what is the work in progress? Then what is our finished goods? You will say FG, correct? See here, what is the meaning of inventory? See, inventory is a tangible property to be consumed in production of goods or services or held for sale in the ordinary course of business. So end of the year, the unsold item is called inventory or stock, correct? So inventories are unconsumed or unsold goods purchased or manufactured, correct? So what is the product you are keeping in your hand? That is called inventory, correct? End of the year. What is our stock? Maybe you can say opening stock or closing stock, correct? That's what the year. See, types of inventory we can see here, correct? What are the types of inventory? It may be opening stock or closing stock, maybe according to our finished goods, or maybe work in progress, or raw materials, or consumables. So these are the ways you can say inventory in different angle. Okay, so mostly what is opening stock and closing stock? At the time of opening, when you start the business, there is no question of stock. Suppose in any new business, end of the year, definitely you have some stock. That is called closing stock. So next year the closing stock become opening stock, correct? That you will discuss detailedly later on. Okay. Now the very important term, expenses. Yes, correct. What is the meaning of the expense? Okay. So when you're doing the business, naturally, how you will do the business? So without expenses, we can't get profit. Correct? Why you are doing business? Okay. What is the expenses here? The cost incurred by a business in the process of selling goods and services are known as expenses. So maybe in the form of cash payment, correct? So for example, when you're running a business, definitely you appoint person, you have to pay salary, then when you have to pay office rent, then any electricity expenses, then conveyance like that. Then similarly you want to buy the asset, correct? For that you want to keep the computer. That's why reduction in the value of assets or cost of goods sold. That's why these are the situation. You can say it is called expenses, okay? Then expenditure. Expenses, here what is the meaning of expenditure? Slightly you have become confused here. See, it is the amount spent or liability incurred for acquiring assets, goods and services. Okay, that's why here, there are expenses for the business. Here also expenditure for the especially acquiring assets, goods and services, amount spent or the future liability. The expenditure may be revenue expenditure, capital expenditure. So what is the, why it is called revenue expenditure? The benefit only the same year, less than the year, correct? What is capital expenditure? The benefit more than the year, more than 1 year. That's what it is called capital expenditure. For example, you bought any car, in interior decoration, you want to change interior decoration, that expenditure is called capital expenditure. Suppose you have any repair for that particular car, that is called revenue expenditure, correct? So later on you detailedly understood the different type of expenditure. So here right now, what is the expenditure and revenue expenditure and capital expenditure? Revenue expenditure, same year, less than the year, the benefit arises. For capital expenditure, for longer benefit, definitely it is called capital expenditure, correct? Then, see, the business expenditure, again, the capital expenditure, the revenue expenditure. So what is the capital expenditure? May be enjoyed by the more than one financial year. You will see what is financial year later on. Okay, so more than the year. Then, usually large budget, correct? When you buy the house, definitely see capital expenditure. Occur occasionally, very rare. Every month you can't buy the house, correct? Then examples, purchase or construction of fixed assets. Then incurred, expenditure incurred to increase the useful life of the fixed asset. So why you are going for the capital expenditure? To improve our business for longer benefit, correct? When you buy any machinery, why you want to buy the machinery? You want to increase the product, correct? For that, you are going for the capital expenditure, longer benefit. Coming here for revenue expenditure, benefit is enjoyed within one financial year, usually small budgets, correct? Then occur routinely, regularly you are spending for the expenditure for day-to-day activities, correct? That's what is called revenue expenditure. So example, correct, depreciation. For any asset, definitely is a depreciation. Then carriage repair, then maintenance, stationery, selling, then marketing, administration. These are coming under, every year you are maintaining the same, correct, consistent of the business. That is called revenue expenditure, correct? Then, what is cost? The definition of cost. The cost refers to the money incurred to produce a particular product or service. For example, you are going to buy one pen. So before that, a seller will fix first what is the cost of the pen, correct? So thereafter only they will fix profit. Then finally you will pay. For example, 10 rupees is as a pen. So naturally, what is the cost of the pen? So maybe cost of the pen is 8 rupees. Then 2 rupees is our profit. So that is a maximum retail price, 10 rupees you are going to pay. Correct? That's what here definition of the cost. The cost refers to the money incurred to produce a particular product or service. All cost involves a sacrifice of some kind or other to acquire some benefit. Correct? So spending for cost, definitely some benefit is there. The cost incurred to perform all the activities of a business process, starting from purchase practice of production to selling our product in a market. For example, the raw material, going to buy the pen. So the pen, suddenly you can't get it, correct? The raw material they applied, finally after the process, the finished goods is pen, correct? So after the FG, finished goods, you will get the pen. That's why here definition of cost very, very important. That it is called cost, also called cost of production. For higher classes, you will study. So you already discussed now the one of the branches accounting, cost accounting. There you can study detailedly. Once you study this definition of cost of production, when you became a cost accountant, you will learn detailedly. So here what is the cost is called as also cost of production. So what is the cost of production? So total cost of the business activities, correct? That's what the definition of the cost. Okay, then the cost may be direct and indirect cost. So why it is direct cost? Directly related to the business, directly accountable to specific cost object, such as the process or product related to the business. Salary paid. So when as employee you have to pay salary. So without salary they can't do, correct? So that's why it is related to the directly related to the business, direct cost. Indirectly related to the business, it is called indirect cost, correct? That's all the idea here. Like insurance, any machinery you have to take insurance, then any communication purpose, telephone expenses like that. This indirect cost is salary. So also indirect cost. Sometimes wages is direct cost, correct? That is very, very, very important. See now the revenue. What is this very important term here? What is the meaning of revenue? See, the revenue is nothing but what? It is related to the income generated from the sale of output in product markets, correct? There are two main revenue concepts to grab this stage, correct? So maybe later on you can study what is average revenue, so marginal revenue. As a revenue here, so after your generation of the business, you got some income, that is called revenue, okay? That is the idea here. Maybe future you can study average revenue and marginal revenue. Okay, when you are for management accounting, correct? We discussed now. That's what are the discussion coming under financial accounting, cost accounting, and management accounting. Correct. One more is corporate accounting. That's mainly for the corporate companies. When you are higher classes, like when you are going for BCom, for that we discuss corporate accounting. Okay. Now we already discussed expenditure. Here see receipts opposite. What is the meaning of receipts? The receipts nothing but the amount received or receivable by selling assets, goods or services is known as receipts, correct? So through the business, whatever whether it's asset or goods or services, you got money. That is called receipts. So here also, there we studied what is capital expenditure, revenue expenditure. Here business receipts, maybe same manner. Here also it is called capital receipts and revenue receipts, correct? See, there we studied capital expenditure, here capital receipts. There we studied revenue expenditure, here revenue receipts. Same manner for here non-recurring in nature. So not related to the business. Okay. Effects is carried to the balance sheet. Okay. Whatever these things. What is the example? Any sale of fixed asset, you got the gain. Correct. Receipt of loan. So you got some loans. Okay. Similarly, coming revenue receipt. Naturally, sales revenue received by the business. Correct. Through then interest on deposit. You deposit into bank, you get the interest. Correct. Then discount received. You will see later what is the meaning of discount. Okay. That's what here. Simple opposite. They have discussed the capital expenditure, revenue expenditure. You have discussed the capital receipt, revenue receipt. What is capital receipt? Again, for the non-recurring in nature, longer benefit year. Okay. Then revenue receipt, every year you can get the revenue receipt. Okay. Then profit. So the profit is a very, very important term. Even laymen know what is the meaning of profit. Correct. Here, why a person doing business? Mostly they want to earn profit. Correct. Here, what is the meaning of profit? So profit is a factor income attributed to the entrepreneur. Correct. The main function of entrepreneur is to bear uncertainty or take risk. Income that entrepreneur gets in return for this function is called profit. Okay. So as a business risk, after involvement of all the risk, finally he got some profit. That's why the people are running the business. Correct. That's what very, very important. Profit, one of the important terms. So maybe that what are the types of profit? You know the gross profit, the net profit. So what is the operating profit? So non-operating profit, then capital profit, then revenue profit, then profit after depreciation. These are the discussion. So further classes you will study detail. Here just what is the meaning of profit, then types of profit. At a glance you will see here. Okay. Then going for the gain. Okay. So gain. Yeah, what is the meaning of gain? It is a profit of irregular or non-recurring nature. So it is not a regular one. It's irregular, non-recurring nature. It is a profit that arises from events or transactions which are incidental to the business, such as sale of fixed assets. Correct. For example, we are selling your land or any machinery or any car. For that, for example, 10 lakhs worth of car, you sold about 12 lakhs. The 2 lakhs is called what? Gain. Correct. That's what they are telling here. Correct. See the meaning. That's why coming capital gain. Any profit or gains arising from the transfer of capital asset is taxable. So under the yet capital gain, in future when you have higher classes, in the income tax subject you study what is the meaning of capital gain. Here the gain, the main is here capital gain. Idea here I mentioned here. Correct. That's what. Now income. See earlier we seen expenses. So what is the opposite of expenses? Income. So again, income, I will get it definitely sales revenue, income, and in the ordinary source of the business activities. I will get income. You have to do some business, correct? So once you do the business, you get the income. That's what's here. There may be income may be gained from the asset side. Okay, that's why here the income is very, very important part. In a profit, so what is the income, what is the expenses, what is the expenditure? So these are the terms we're keeping on our next classes onwards. Okay, these are the very, very important terminology, correct? Then, what is the loss, correct? So income is definitely loss. Profit. Before we saw profit. So whenever profit, definitely there is a loss also is there. So what is the loss? So any businessman always like loss, correct? But what happened? So loss is an unrecoverable and unanticipated decrease in a resource or asset outside of normal business operations. So loss is an excess of expenses over revenues, correct? Either for a single business transaction or in a reference to the sum of all transactions for an accounting period. The presence of a loss for any accounting period is closely watched by the investor, correct? Because he invests the money and creditors, okay, any supplier, since it can signal a decline in the credit worthiness of business. That's why you should be very careful. That's why business is always a risky factor, correct? Always very careful to run the business to avoid unnecessary losses, correct? That's what the losses meaning here, loss. Now discount. So discount you know very well, correct? It's a very practical term. Everyone knows nowadays discount. What's the meaning of discount? Correct? See here, what's a discount? It's given to encourage high volume buying prompt payment, correct? So for example, if you pay 1,000 rupees immediately, any product worth of products, they will use 10% discount, correct? So immediately you paid money. That's what discount. So they encourage you to buy more. So here the rebate also, some confusion will come. What is the meaning of rebate here? Here rebate means inferior quality. So delayed delivery. So discount is different. Rebate is different. So rebate means any fault of goods, they will reduce the price and give it to you, correct? That's what it is called rebate. So discount here to encourage for high volume buying. If you give discount, generally move for the more purchase, correct? So discount may be type of discount is very, very important. Maybe cash discount or trade discount. Why it is called cash discount? See, it is a cash discount, you are paying immediate payment, correct? It is a reduction granted from the invoice price in consideration immediate payment. But as a trade discount, what is the meaning of a trade discount? The supplier will get trade discount because of the price list of the price goods for the more prices, correct? For lump sum purchase, the supplier will get trade discount from their supplier, correct? Not a customer, correct? Here, coming for the cash discount, it is done to encourage earlier prompt payment. When you pay immediately, you have some benefit, correct? That's why 10 discount they will give you. Here also promote the sales, correct? Trade discount. Then coming for the cash discount, it is shown expenses, correct? In a profit and loss account. Later on you know what's the meaning of profit and loss account. But in a trade discount, they never show. Only by the understanding, correct? For example, 1 lakh worth of products. Suppose a supplier will buy some mixie, correct? For example, Sumit mixie they buy, correct? So the Sumit mixie, the sub manufacturer will give you some discount. That is trade discount. Suppose you are going to buy the Sumit mixie, immediate payment, that is called cash discount, correct? So it may vary with the quantity purchased, correct? Here it varies with the period. That's what here is very, very, very important. You should be very careful now itself. What's the meaning of trade discount and cash discount, correct? Then the trade receivables. So one of the very, very important. So what's the meaning of trade receivables? So current receivables collected within one operating cycle or 1 year, maybe 12 months, correct? Whichever is longer. The trade receivables nothing but what? So amount owned by the customers for goods sold and services rendered as a part of normal business operation, including accounts receivable. So here, what's the receivables here? See, we are dealing goods, we sold on goods on credit, correct? So the customer will pay to us later on money. So collectively all the customers, they will pay to you, correct? So all the together collectively called receivables, correct? That's what. So it is a current assets, coming under current assets. That is the idea here, correct? Then trade payables, opposite. The trade creditors, accounts payable. A creditor person to whom money is owing or payable. For example, as you are running a business, you have to pay to outside as a creditor. Any product you purchase on credit, you have to pay later on, correct? That is called trade payables. A trade creditor is a person who owes to whom money is owing or payable as a result of purchase of goods or service on credit, correct? So accounts payable is a liability. The results from the purchase of goods or services on account, correct? Maybe on, especially whatever the receivable and payable, all based upon credit transaction, correct? We discussed already in the business transaction. So here all credit transaction, you can see trade receivable and trade payable. Okay, finally, see the comparison here. Accounts payable, accounts receivable. Okay, so accounts payable, money owed to vendor. Here, money owed to your business. And finally, vouchers. It's very important as a accountancy subject. Voucher. What is the meaning of voucher? It is nothing but it is a evidence of a document. Voucher is a evidence document. Suppose going to buy any computer, any cell phone, you have to get the bill, correct? That bill is called a voucher. For the company, for suppose your company, you are buying anything, you have to prepare the voucher. For that voucher, you want some supporting document, correct? Such evidence are the source document, correct? That is very important. So on the basis of source documents like cash memo, invoice, vouchers, correct? So these are very important for the what is the meaning of vouchers, correct? Evidence of document. As accountancy, evidence is very important, correct? That's why discussed more than some 26 terms. I think so. See, 25 terms, basic terminology, accounting terms discussed. So again, you keep in very much in your mind for our other future classes. Okay. So I hope that you understood all the terms. So you please once again go through it everything, then try to understand the terms. Okay. So thank you very much.